Hello and welcome to this edition of the Market Share. I'm Paul Gifford, Chief Investment Officer at First Source Bank. Joining me today is Matt Noll, one of our senior portfolio managers. Matt, it's been a really good year for equity investors, but when you look at some of the major indices, the Dow Jones, the S&P, and the NASDAQ, it has not necessarily been an even year for performance. So could you explain some of the differences?
Sure. So what we've seen so far this year, whether we're looking at the NASDAQ, which is more tech focused, the Dow Jones Industrial Average, which is 30 of the kind of largest industrial names that make up markets, or the S&P 500, which is more broad-based, 502, I believe now, different stocks, performance has varied quite a bit. So when we look at the first chart here, year-to-date performance, the S&P is up 14.7%, the NASDAQ's up 15.7%, and the Dow is only up 7.8%. So some of the differences there year to date, I think everybody knows tech has done very well. That's more dominant in the S&P and the NASDAQ indexes. And then you've got some of the more value-based names in the Dow that haven't done as well. When we look at the second chart, which looks out 10 years, we can start to see some bigger differences in performances. So 10 years ago, the NASDAQ started pretty similar to where the S&P and Dow were for a few years, and then the NASDAQ really shot ahead after the pandemic. So the past 10 years, the NASDAQ is up 291%, and the S&P and Dow are both up 177 and 140% respectively. So you really start to see what happened after the pandemic and technology taking hold, and the performance really doing well there. In our last chart from the start of 2022, so really when we start looking at different time frames, the point we pick matters a lot. From the start of 2022, it was a bad year for equities. The NASDAQ is only up 10% from that point until now. The S&P and Dow have both outperformed, with the S&P up 14%. So it really depends on what starting point we are at and kind of where we're looking at those indexes from.
So clearly some differences in the indices, not only on performance and when you pick it, but even though they're broad-based indices are supposed to represent the market, there's some differences in the types of stocks and the sectors that are involved. Can you share a little bit more detail?
Yeah. So when we're looking at the different indices, the makeup of those differs quite a bit. We've got a table that we'll show here. The first table shows the top holdings of the various indices. So you've got the Dow Jones, S&P 500, and the NASDAQ. If we look at the Dow, United Health Group, a big healthcare company, makes up almost 10% of that index. When we look over at the S&P 500, it's really led by those tech companies. I think everybody's heard of the Magnificent Seven. Those top names are really the tech companies that are driving the returns in the S&P. If you look at the NASDAQ, again, that's going to be tech-centric. It excludes financial companies. So you see the top names really differ one index to the other. If we look at the next table, sector by sector, the Dow Jones is dominated by the financials. S&P 500 and NASDAQ, a lot more so the technology companies. So when you start looking at the percentages, there's a big difference between the various indices. And then the last table we have shows revenue by country. The Dow and S&P, most of the companies are U.S. focused, U.S. centric, a lesser reliance on China. When we look at the NASDAQ composite, mainland China and Taiwan make up 15% or more of the index. So you have a lot more geopolitical risk in the NASDAQ than you would maybe the S&P or Dow.
So I guess the point of that is don't look at one index, right? You should be more diversified when we think about that. So Matt, thanks for your comments today. If you enjoyed today's video, I encourage you to share those with friends and family. If you do not regularly receive the market share, I encourage you to subscribe by using the QR code at the end of the video. And as always, thank you for the opportunity to serve you and your family, and have a great day.